Hi, Stephen. Thanks for joining the podcast today.
Hi, Sanil. It's great to be here in the wonderful Ormo Baths.
Yeah, it's nice place, isn't it?
Oh, it's
It's
great. All we're
magical.
missing is a rubber ducky.
We'll get that plan next time.
Brilliant.
But I was wondering, you get all these crazy ideas. Uh,
Well, yeah, it's a stimulating environment, so definitely it's a good place for ideas here in Ormo
cheers.
Baths.
To start with, that's what the ideas, the connection happen when you're in the right environment. We are surrounded with the right people.
Yeah,
That's one of the reason I decided to come here a couple of months ago and surround with good people. And
yeah, great.
even we met 2 months ago in the last fintech tables.
That's right. Yeah,
But you never know what happened after that. And now we're doing a podcast.
yeah,
And
it's great.
this conversation happened 2 days ago while we're having the dinner.
Yeah, exactly.
So that's what I value. Meeting people, having those real conversation. So
Yeah,
so those who
absolutely.
don't know about Stephen, so who is
Yeah.
Stephen and what's Stephen doing?
Yeah, sure. Yeah, I'm Stephen Walsh. I'm the CEO and founder of Keeper Solutions. We're a technology services company, and we work with fintechs only. We're headquartered in Ireland. We're about 80 people now. We've been going for around 14 years, and we have our delivery centres in Croatia and Romania. We work with, as I say, fintech founders with fintechs. Most of our clients are scaled up fintechs. A lot of our clients come to us and they're fintech startups. Usually it's best if they're funded because it's good to have some funds to design, develop product. So yeah, we help fintechs to design, develop, scale their products, and AI integrate them as well. Yeah.
Cheers. You already mentioned fintech a couple of times now, and
Yeah.
we're gonna mention a lot during the podcast. But again, for those who don't know what is fintech,
Yeah.
do you wanna elaborate a little bit?
Sure. Well, if you're familiar with the Revolut app, I think that's probably the poster boy for fintech. So
Yeah.
it's really, I suppose, the next generation of finance, where it's based on technology. That's where the name comes from, financial technology,
Yeah.
and it's based around delivering services that are designed around the user experience, that are probably there's no branches or anything like that. So a lot of them are consumed on the mobile phone or on the screen, and right now I think it accounts for about 3% of the global financial services market globally is fintech. But if you look at the net promoter score of fintech services, which are designed around customer needs, they tend to be in the 80% range. Whereas if you look at, say, a consumer retail bank, they often have their net promoter scores in the 20s. So
Yeah.
there's a massive differential in terms of the experience, and that is the kind of competitive advantage I think that the fintechs have. But before, I think a few years ago, people were saying, "Oh, the fintechs are going to eat the banks." But we see so many of the fintechs now are B2B and B2B2C or B2B2B.
It is. I remember I've been to London last year for FinTech Connect, where you see
Yes.
the bigger banks and the new
Yeah.
fintechs come in. And one of the panel they were focusing on, we don't want to compete. We are looking into ways we can walk side by side.
Yeah.
Then so that's the conversation happening right now. And as you mentioned, Revolut, so when you look at that, only 1% of the fintechs are most popular, like for
Yep.
the consumers,
Yes.
they're familiar with.
Yeah.
But when you look at the fintech industry, it's more than that. It's span into various payments. It could be financial service, maybe based like products. It's a
Yeah.
wide span.
It is lending.
Yeah.
There's the crypto side of it. There's wealth management. Yeah, there's lots of things, and also of course you've got services which are outside strictly the financial services domain, but which have a fintech dimension to it. And then of course there's embedded finance, where that, for example, that you've got a lending product or a payments product that's kind of embedded in the customer journey. and it kind of sneaks up and just does its stuff. And one of our clients, actually, a very successful company out of Atlanta called Moment, MOMNT.
Okay.
They're a point of need lending company, and they're able to spin up loans in a few minutes at the point of sale, and they kind of up to around $30,000. So it's kind of changed the experience that you don't.
I think that's why you
Yeah.
mentioned earlier when you look at the legacy banks and when look at the fintechs, even the net promoter score you're talking about, because I think these fintechs have the ability to get a new feature as soon as possible, or creating a different solution for a problem that's been there for a while. I think that's why they stand out. Even the recent success with Revolut and the other neo banks coming up, and there's lots of startups.
Yes.
So when you think about startup, there's a category called fintech because there's lots of stuff startup emerging, and now it is spanning into Web3 as well. You know,
Yeah.
I got a good chance to work with Super Team Ireland in the last couple of months,
Oh, really?
and the
Yeah.
revolutions happening in the space.
And what did that involve?
So they have like every Friday you go there, you have like a
Yes.
build day, you go but then you have people who have non-technical, people are technical, then you come in and see what's happening in the space, and they give you an opportunity to build stuff. You're finding a problem, they'll be looking at how we can solve this.
Yes.
So Web3, and obviously that's something the regulations,
Yeah.
happening now, what can be, regulated in that space, but still that's an evolving space as well.
Well, it is, and I mean, I think the kind of blockchain and the DeFi and the Web3, it has, like in the last year or two, it's really kind of gone from a solution looking for a problem to, particularly with stablecoin, that it's becoming mainstream. And look, it doesn't have the mainstream volumes on it like, the conventional international
And
payment rails.
tokenization.
Tokenization, absolutely. So yeah, I think it's becoming integrated into J.P. Morgan and the whole finance industry, and it seems in the last 12 months that stablecoin is as hot a topic at the conferences now as AI. So
It is, yeah.
yeah,
And coming back to where, as you mentioned, you mentioned you really work with fintechs.
yes,
That's what you mentioned
pretty
earlier.
much.
And the conversation we had the night before was about, you're creating something called like a lab where,
Yeah.
you're working with these models and LLMs
Yes.
and PI data or the stuff. Do you
Yeah.
want to share something?
Sure.
that?
Yeah. So I suppose with the LLM revolution over the last few years, of course we've been working with machine learning and predictive analytics and various things like that in the past. But so we set up a dedicated AI lab in the company, and it works on research and development, internal projects. It consults us when we're engaging with new clients. It also assists with existing clients where there's modernization, where there's AI integration taking place. So it's a delivery unit and it's a research unit, but we we've got a very strong leader in there who's got a kind of PhD in AI machine learning, and we've got a great team around her. One of the things that's come out of the AI lab that we've actually been using internally for the last 2 years is an AI gateway. So it's built on open source, open web UI, and it allows access to Gemini, Claude, ChatGPT, and Perplexity. And we just released it as hubgate.io last Thursday.
Okay.
And it's got some cool features because it's providing a gateway that will kind of give AI governance out of the box for small, medium-sized firms. But we've also got a PII redactor in there. So one of the big barriers that we've found to adoption of AI in fintech and in wider industry is the issue of you cannot put a PII into an LLM.
Yeah.
That's personally identifiable information into an AI model. So we've got a PII redactor built in, and that we think is opening up wider use cases for companies who want to be able to use AI responsibly without having to spin up a kind of small model in a private cloud or that kind of thing.
So does that mean if any company using that feature gonna save them a lot of time and money? Because most
For
of the
sure.
time when I speak with an AI engineer, they say,
Yeah.
okay, we have to mask all the information
Yeah.
before we passing this to the
Yeah.
LLM. So I assume that can save you a lot of time and
Yeah. Yeah. Well, look, I mean, the engineers, they're able to do that, and you can say, okay, we've got to mask this data. But I think for kind of general use of AI within companies that might be using it for operational purposes, for marketing, for planning, for finance, or for whatever. I think that you can, if you have a policy which says everybody or nobody must put PII into, into their AI, and that's very good. That's fine,
yeah.
but that's kind of in the PDF. So it's much more powerful if you've actually got in your gateway, something that's redacting the PII, that's preventing it from getting there. So there's compliance in your operation, and then there's an audit trail saying, look, all these pieces of information were redacted. So if you're in a regulated industry, if if you want to be able to prove that you're compliant, you've got that capability. And that's what is better than a pinky promise. So you heard me talk
Yeah,
about
that's
that.
what I was coming
Yeah.
back to, the pinky promise, which resonated a lot on our last fintech
Yeah.
tables.
Yes.
I still remember that slide where talking about pinky promise.
Yeah, and that
And
just came out from a conversation in a previous roundtable. Somebody said, "Oh yeah, the pinky promise,"
yeah.
but it's really kind of crystallizes that problem, isn't it?
Yeah, because I think this is time we need to talk a lot about governance,
Yes.
what's in place. As you mentioned there, if you're working with someone, if something go wrong, that's still on you.
Mm.
You can't just say about the pinky promise.
Yes.
And again, as I already mentioned about the fintech table, so
Yeah.
how these conversation helping
Okay.
for this?
Well, let's just call out what the hell is this pinky promise,
Okay.
right? So
Yeah, for those who don't know
for
yet,
those who
yeah.
don't know, so say you're using Microsoft Teams, then you've got Copilot. And then if you read the terms and conditions of Copilot, it says it's okay. You can put your PII, you can put your names, your email addresses, your Twitter handles, or your social security numbers, your telephone numbers. You can put it all in here, and don't worry, it'll be just fine because we've got all of these things. Now, that's in fairness to Microsoft. They have the best pinky promise of anybody.
Yeah.
So they do have a lot of layers. But I think one of the things that so we don't believe that you can, if you're in a regulated company, say if you hold a money license and you can't say, well, to the regulator, something's gone wrong, and you said, well, these guys said it was all fine. Say no, but your company has a license with the regulator. You lose the license, not the AI. And likewise, if you breach trust with your customers, that can't be replaced, or you can't say, oh, it wasn't my fault. So you've got to be more serious. And so we're down with the pinky promise, up with the do not give your data to the LLM in the first place, and track that. Show who was using it, show all the data that was redacted. And then look, if something goes wrong, you can say, well, look, that's gone wrong and we're sorry about that, but we have taken all these measures which are provable, and you can explain yourself to the regulator and to your customers, and you can move on. So it doesn't have to be an existential crisis. So let's get real about pinky promises.
It is, because at least you can show them this is what you have done.
Yes.
Things may go wrong, but again, you tried whatever you could, rather than just relying on the pinky promise.
Yeah.
And because everyone using AI now, and I've seen my friends uploading their bank statement to ChatGPT and thinking it's okay, but
well, there's value in it, because it was you put it in and then you can get all these insights, and that is useful. But what's the trade-off?
Yeah,
it's you've put, like, would you put your bank account statements up on Instagram?
no.
So why would you put them on?
Yeah.
Okay, it's different, I know, but like, for example, lawyers, like in the States, a court found that lawyers that had put case material into an LLM, that their client attorney privilege was void. That's pretty serious, you know.
Yeah.
So that's what can happen, you know, if if you let that data get out there, then it's like putting it out in the public. So
Cheers. Again, as I mentioned, so that's why we want to create a tool. You know, even what we'll be building here is trying to gamify savings, but it's
yeah,
more than gamify saving. It's more like how you can look at your financial and get a clear picture of where your money going. Are you spending a
yes,
lot? Are you saving enough? So rather than putting the statements from the ChatGPT
yes,
or any other LLM,
yeah,
we'll be using, as you mentioned there, like a safer way
yeah.
to look at your financial and get an AI to look into it and give you insights. How much you're spending on coffee.
Oh, great. Yeah,
Are you saving enough? All this stuff.
yeah. So that's a safe way to do
It
it,
is.
and you're extracting that data via open
Open
banking, I
banking.
believe.
So
Yeah,
so we use open banking. That
yeah,
means we'll get the transaction data.
yes,
Then same
yeah,
again. We follow all the regulations. I make sure
yes,
no personal information is passed through.
yeah.
Then the AI will look into it and give you feedback.
Great.
It's not like you're sending that in a void. It's
No,
just
yeah, no. Well, that's a responsible way to do it.
it is.
And so, can you tell me? So, like, is Prize Bank?
Yeah. So
Yeah.
even the name says because when you look at the finances, people first of all nobody want to talk much about money.
Yes.
That's not much spoken thing.
Yeah.
And the second thing is people don't saving enough because it's not that much fun.
Yeah.
So we want to bring that fun element, telling every 1 pound you save, you get a chance to win £100.
Yes.
So
Oh,
yeah,
great. Yeah,
so
yeah.
rather than saying
Yes.
it's easy to tell someone, okay, you better start saving
So
for
are you
your emergency fund.
running competitions frequently, or
It's like every week.
every week?
Every week.
Okay.
So it depends. So the AI will look at how much
Yeah.
you saved in the past
Yeah.
week, and if your saving is improving,
Yeah.
you get a chance to win some money.
Great.
So
Yeah.
just by saving money, you know what I mean. So that's like
Well,
we want to gamify.
that sounds
it.
like a good habit. Like, it's
Yeah.
better than playing the lottery every week.
Oh yeah.
Yeah.
Well, tell me about how many people, buying lottery or see all this competition side, thinking, oh, if I win this, it's gonna change my life. They're gonna bring in fortune.
Yeah.
But if you actually maybe get the same dopamine effect, but just by saving money.
So it is gamification, but it's very cynical because your chances are not very good. Whereas I think I think I read that if you have 3,000 in savings, that's very valuable because it gives you it protects you if something. If your car breaks down, or if
the
you have a
emergency
medical
fund.
emergency,
Yeah.
so it puts you in a safer, more stable position.
Yeah, because the last year I found out 1/3 of the UK population don't have an emergency fund.
1/3.
1/3.
Right.
So that means
Yes.
that population have. If your car
They're
breaks
vulnerable,
down,
so I think.
Yeah.
Yeah.
If your car breaks down, if something happens, you're not prepared for it. There's no emergency fund. And I've seen a podcast this couple of months ago where this lady was saying, if you have an emergency fund, that means we have this money to survive the next 3 months in your bank account.
Yes.
The amount of relief that gives you is massive.
Is that a psychological effect?
It
then?
is.
Yeah.
Because your mind knows, even if you lose your job today or if something happens, you have enough money in your bank account so you don't have to worry about the next 3 months. And that gives you a relief and the sense of freedom.
Yes.
So that actually help your mental health as well. So
Yeah.
so that's how it's
important.
the financial health and mental health is so related.
Yes.
So that's what we are looking
Yeah.
into, and we do this employee well-being survey. And
Yes.
70% of the people don't have an emergency fund. So these
Yeah.
are employees working in different sectors. So that's where the idea of PrizeBNK coming from, because
Yes.
people not saving enough is one of there's many factors.
Yes.
Some people may not have a disposable income.
Yeah.
For those who know how much they're getting in terms of interest.
Yeah.
So we're trying to bring this to motivate people. As I
Yeah.
said, I seen your light. The eyes were brightened when I said, if you may win £100, and
Yes.
our goal is to bring that up to it's £100 now, maybe £1,000 or £10,000. Like,
Yeah.
so the more you save, you may win more.
And
so
is that the primary kind of gamification method?
It is,
Yeah.
it
and
is.
it's working well.
It working well.
Yeah.
See, it's premium bonds in the
Yes.
UK. Doing this for the
Excellent.
past 60 years, and you got price bond in
Yeah.
the south.
Yeah. That's
You
it.
know, where
Yeah.
you
Yeah.
where you buy bond, you don't get
Yes.
any interest, but
That's
you
old
you
school.
may
Yeah.
win a jackpot.
Yeah. Absolutely.
So
Yeah.
we using the same
Oh,
concept.
great.
Yeah, because I
Yeah.
was already working and it's fine.
Yeah.
So we're trying to bring that to the employee
So
employee space.
you're in a kind of B2C phase right
B
now.
to B to C.
B2B2C.
Yeah, so this is
Okay.
gonna be free for employees, and then we looked at okay,
So you're bringing
obviously
it to companies.
where
as
these
the-
people
yeah.
these people spend. So an average person spend most of the time in the workplace.
Yes.
Then at the minute there are lots of employee well-being tools
Okay.
which not being used by the
Yes.
employees. So
Yes.
then employers are looking for tools
Yeah.
to give to
they
their
are.
employees,
Oh, they are.
which
Yeah.
they want to use, because current market average is only
Yeah.
8%
Yeah.
of the employees only using the existing tools. Then
So is it salary sacrifice?
not really. We will
No.
try to like a standalone, but these are the things we want to go
How
further
does it
down
get
the line.
funded though? If say, okay, so I'm thinking of working for this company. They have this benefit, which is
So we charge
PrizeBNK, yeah.
employers per employee per month basis.
Okay.
Yeah. So
And how does the employee build up their savings fund through this channel?
So they download the app through the App Store, Play
Yeah.
Store, and whenever they come to the app, we identify okay, this employee coming from this employer.
Great.
Then we use open banking where they connect their bank accounts. Then we have a full
Yes.
picture, how they're sitting
Okay.
in their finances.
Yes.
And when we have
Fascinating.
the transaction data, we automatically calculate how much emergency fund you need for the next 3 months or 6
Right.
months.
Yeah.
Then we motivate them to start building up that
Okay.
savings.
So they log in. They give permission to their bank.
Yeah, the
to provide
consent,
the
yeah.
data. It populates their profile, and then you do the analytics. There's the dashboard, and we'd recommend that you should save this amount.
It is.
Yeah, and they can automate that saving through.
They can.
PrizeBNK,
So
yeah.
that's the other feature we're working on, where
Yeah.
they can automate saving, because that's people will like to set up and forget about it.
Yes.
That's what I done with my S&P 500 investment, because I set
Yes.
up this couple of years ago,
Great.
£100 direct debit, and now it's like $2,000, $3,000
Nice.
because
Yeah.
you set up and forget about it.
Fire and
So
forget,
that's
yeah.
how can we do this for savings? If
Okay.
you can put aside
Yeah.
at least £10 every week,
Right.
that
Yeah.
will be a chunk of money by end of the
Okay.
year.
So they can set up that direct debit
These
in there
things,
as well.
yeah.
Great.
Then also the government is moving towards workplace savings.
Yes.
Just like the way done with the pension.
Yeah.
So when the opt-out
Is that
pension
kind
was
of an
introduced,
SIA?
it's just like an opt-out pension they have currently
Yes.
now. So the
Yeah.
government is trying to do something like opt-out savings. So if you
Right.
don't opt out from the savings, you
Okay.
you
Yes.
get that goes to savings account.
Excellent.
So these are like coming down. So we were like, we should be ready when that's being rolled out.
Yeah. Well, exactly. So you can get a kind of policy tailwind, and that you
It
can
is.
provide an outlet for, because the government would be keen for these schemes to have good uptake, and if you're aligned with that model, then that's great.
It is, because even see the yesterday roundtable, the guys from FCA,
They
and
were,
yeah,
they
they
were there
were.
in force.
I was speaking to them, and
Yeah.
and if you're building something for financial inclusive,
Yes.
so they'll be FCA will be keen to into that as well, and to see how you solving this problem. Even that came up earlier conversation. It's not about the features, it's not about the technology you're using. The bottom line is what problem you're trying to solve,
Yes.
and how you're solving it.
Yes.
And even when we talk about the technology, and open banking is great,
Yeah, it is.
but still, are you solving the right problem?
Yeah.
And I also seen you worked as a partner for VC, so you've
Yes,
been
yeah.
on the other side as well,
Well,
looking at the
yeah.
companies.
Well, yeah. I mean, I suppose I've been an LP in the Fintech Ventures Fund that's based out of New York and Atlanta, but that actually kind of happened organically, because we were working with that company out of Atlanta, the point of need lending fintech called Moment,
Okay.
and they were pre-funding at that stage in 2019. So, in fact, they ran out of money. But we kept developing. They were close to closing a round, so we kept going with them for 3 months. They closed the round, and we said, look, we just instead of repaying it, why don't you give us a convertible note? So we're on the cap table of Moment from an early stage. So actually, FinTech Venture Funds was one of the leading kind of seed investors, and then they saw how well that Moment, the Keeper Solutions Moment partnership had worked in terms of getting an end-to-end lending platform out onto the market within 6 months and then scaling it out. So we got to know each other through that mutual kind of client, and then I suppose we just participated in their fund too. So we do find occasionally that we end up putting a little bit of investment into our clients, because we tend to have very long-term partnerships that can span the life of, they can span 5, 10, 14 years is the longest partnership that we have. So sometimes having that alignment, that equity alignment can be a good part of the overall package.
It's good. Again, I think even coming back to that, so you would love to associate with someone if you feel like are they solving the right problem and they're solving in the right way.
Yeah, well, that's it. I mean,
it.
it's like I suppose a tricky part for all founders, whether they're in fintech or not, is to get that initial traction, and to prove to themselves and to prove to investors that they're solving an important problem in a way that's useful for their target audience, and that they can deliver effectively to that. So I
think that's also the right time for now for Keeper Solutions as well. You coming up with these tools where make sure the AI governance is in place and you using the data in the right way. And I also seen that you bootstrapped Keeper Solutions.
That's right.
And we are actually raising money, and in other fintechs are not raising money. So which is harder,
Well, it's kind of different, because Keeper Solutions is ultimately, it's a service company, and so it's not a product company, even though our clients are fintechs and we help design and build and scale products. So it is kind of different. Like I'd been working with multinationals like Dell and Perot Systems and Misys and Kindle Banking Systems. So I kind of knew core banking and financial technology and global service delivery and software development a bit. So when I set up Keeper Solutions, I was kind of aware of the sort of needs, and I wanted to develop a sort of a boutique firm that was kind of specializing in that area. And so we were able to, be invoicing clients within a few months of starting up. So we've kind of evolved naturally from that, but we haven't taken any investment over the years, and that suits me personally, because I'm kind of able to navigate the course as I like it. I don't have any co-founders either, but we have a very strong leadership team, and we've actually built up a very good team. We've got very strong tech leads and some very good kind of operational and talent kind of people in the company. So yeah, like we're 14 years in now. We're about 80 people, and I think we've got a good reputation in certain ecosystems down in Atlanta, in Ireland, and now in the north of Ireland. We're quite active, and we're hoping to start engaging with fintechs here soon.
Yes.
North of England, Scotland. So yeah, we've developed organically. I suppose that's the easiest way to say it. So I think like what you guys are doing is probably a level of difficulty greater, because you're trying to navigate all the things of starting up a business and getting your value proposition, but you're also creating a product. You might be having to deal with investors and to take more risk. So it's a tricky course, and we do understand that. So our mission is actually to once, we do encourage fintechs and try and support the ecosystem for those fintechs at an early stage, that realistically they probably need to have some kind of form of funding to engage fully with Keeper Solutions. But then our mission is to provide a kind of a platform for success for fintechs to really help them to go from being startups to being scale-ups to be unicorns and beyond.
Yeah.
That's
That's
what
one
we try to
one
do.
thing resonated yesterday in the roundtable as well. We are creating these roundtables or
Yes.
an ecosystem so that you sort of can help each other.
Yeah. Yeah.
Because there are like founders, there's operators in the network,
Yeah.
and companies like Keeper Solution, the other companies involved. It's more like creating an ecosystem
Yeah.
where you just can help each other. And obviously, it's different from London, obviously. So you're
Well,
looking
yeah.
at
I mean, I think wherever you go, like, I think one thing people don't like is people coming up or calling them up saying, "Hey, do you want some of this or do you want some of that?" It's nobody likes that. But so we do want to engage with the industry. We do want to develop our profile. We do want to identify who are the movers and shakers,
yeah,
and to develop a relationship with them. And I think we can do that by having useful conversations as you go along, and not trying to be selling stuff, but trying to understand people's problems and to see where there's an overlap that you can be helpful. And actually, we'd started doing kind of, some podcasting. Fintech Frontiers is my own podcast. This
yeah.
is going to actually be an episode on that if I can put it out on my,
Yeah,
on my one as well.
of course, yeah.
But also we'd started doing some roundtables, in Manchester and Dublin, Atlanta, and we teamed up actually with Fintech Tables, Ian Davey, and Scott Moncourt from Violex. Really like what they had been doing, particularly up in Scotland, bringing financial institutions, regulators, fintechs together, helping them get kind of market readiness alignment, because a lot of the fintechs, as you know, are going B2B to C,
Yeah.
but maybe you need to be able to prepare to get into a bank, and they're helping with that. So I loved what they were doing up there. And then with Intertrade Ireland, we were able to engage with them, and that's actually where first we had the roundtable in March, and then we had the work group session with the regulator yesterday here in Belfast in the Ormo Labs. So that's actually where it came from, and it's been great because
You have one in Glasgow the
well,
other day.
they're running. Yeah, we'll certainly go up to the next one in Glasgow, and I'm sure that we'll be back down here in the Ormo Labs again in Belfast, because we love the scene here, and we think we're helping to activate the ecosystem, and we've met some great people like yourself
Cheers,
and
thank you.
others.
Just start from there. So now we know what we're building in PrizeBNK, and you yourself, although it was a service-based business, you bootstrapped yourself. Had those
Yes.
early clients. You walk all the way through here. So if you were building PrizeBNK today, what's that one thing you would obsess with?
Yeah, I think it would be. I think it would be focusing on the ideal customer profile, and getting the MVP out.
Yeah.
I know you've got it out there already, but I think going for having a real focus on the problem and addressing it and getting, I suppose, perfection can be the enemy of the good. So and look, I think you've got it out there and you're engaging, but I think that's what I would do, and I think companies that are reluctant to release the MVP because until they get that next feature or the next feature. Now that said, things have changed, right?
Yeah.
A few years ago now, founders had to do so much more work and spend more time and money to get the MVP out there.
Oh, you raised a pre-seed just for an MVP 2 years ago, but not anymore.
Yeah. So now with Claude Code and all of that, you can do a lot now, which is great because you can go and you can show something, to the bank or to your users. You can have something working. Now, of course, maybe the downside of that is that, of course, you're using these models so they kind of understand your secret sauce. But I think in these days, it's about, look, use these incredible tools, get your stuff out there, and it's about getting out to the market and capturing your niche, right?
Yeah.
Rather than saying, oh, I'm keeping my IP to myself. No, just get out there. But where Keeper Solutions can come in, I think, is like we've even, say, Nestify, who they're a little bit further down.
I spoke to the
down
guy the
path.
other day.
Yeah, Niall Dennehy, they're doing great. they've got a great MVP out there, and they're having some fantastic conversations with credit union, savings banks, as well. But they've cultivated a partner. We've cultivated with them a partnership over the last year,
Okay.
and now that when they're signing deals, there's a lot of stuff: integration, product build, back end testing, automation, agentic frameworks, and stuff that Keeper has I suppose, the industry knowledge and the engineering strength, and then we've got our AI lab, so we can bring a lot. So if you guys can go and prove that kind of resonance between your product and your target audience, and then you can start to get that traction when you really need a scalable, robust product. Then build your core team, your technology team, your product team, but also be able to engage. If you want to move fast, then a strategic partnership with a committed partner can help you to scale on that journey. So that's
Being scalable is the thing, I think.
It is, and it is dangerous too, because we've seen like scaling. That's what it's all about.
Yeah.
So that you can have a valuable company that you've got your EBITDA multipliers. If you're making money, you've got EBITDA multipliers. But
Yeah.
so scaling is important. But I would say that keep if you're getting to 1 million, keep the focus on getting to the 1 million, and then from there on getting to 2 to 5 and 10, and then from there to get from 10, 50 to 100. But don't be looking at the unicorn, in the distance. Be looking at what's right in front of you, because sometimes, and I have seen it, that companies can maybe, they might be at the 100 million valuation, they might have got an awful lot of traction, and their next target should be the 200 or the 300 million. But if you scale up too fast and you're saying we're going for $1 billion, and then say maybe the interest rates change, or the market changes, or there's a war or something like that, that you can find yourself that you've kind of gone over your skis. And if you've scaled up as a founder, you don't want to go back to the investors with a down round.
Yeah.
And that can start diluting things and making things more difficult. So I'd say just watch what's ahead of you and get there. Be in the back of your mind, you've got your vision, but make sure that you can get to the next milestone.
Cheers. That's really valuable, and I appreciate that. One thing about podcasts, I wish we can do this all day long.
Yeah,
But you
exactly.
have to keep it on the clock. So
Absolutely.
it was a very quick one, but I do appreciate you coming and sharing these insights and having very friendly conversation.
Absolutely.
And
Delighted, Sanil.
no worries.
Enjoy the
We can do
conversation.
another one. You
Let's
never
do
know.
Yeah.
And thanks again for today.
Thank
And
you.
cheers.
It's a pleasure.
No worries.
Okay.